Good morning. I'm looking at gold this morning. We had some big negative candles at the end of last week, didn't we? Thursday, we had a bearish engulfing candle on the daily chart. Friday, another big red candle, which wasn't a huge surprise, bearing in mind that we had that big bearish engulfing candle in gold. We've been in a bull trend since November. Nice recovery, but it obviously does look like that is the end of it. And just to reinforce that message, big bearish engulfing candle on the weekly chart, another negative signal indicating that this 2-month trend has ended. And when we scrunch up the weekly chart for gold, we are reminded of the fact that we have this huge double top pattern. We recovered quite quickly in November, so maybe now this is the leg down in gold beginning. Overbought on the slow stochastic on the weekly chart, just turning down as well. All looks pretty negative for gold, certainly in the short term at least. Silver still quite negative. These trend lines go back to the beginning of 2021, so this is actually a 2-year channel that you're seeing, and clearly silver is in a bear trend. We've just rejected that upper trend line on that 2-year channel and turning lower again. A very big bearish engulfing candle from last week. We made a new high, we'd beaten the January high and then collapsed, leaving a huge bearish engulfing candle on the weekly chart for silver, which is obviously pretty negative. Not quite a bearish engulfing, well, actually pretty close last week on Thursday, but then really followed through to the downside. If I put a trend line on here, you'll see that we broke the low of that range. We had a little bit of a range here too, and that was broken as well. Looking pretty negative. We are testing a 38.2% fib on the downside when you take the low from October, but that doesn't look like the most important support level to me. We've got a little bit of price action giving some extra support there. I think we'll break it eventually. 100-day moving average at 21.73. Break below 21.70 would be a quite clear break of the support level, and then we have further to move to the downside. Sticking with commodities, oil has been in a sideways trend for the last 2.5 months. We did turn around in the summer of last year, started trending down. Now, I don't know whether this is a bottoming pattern. Doesn't look like a bottoming pattern to me. We're holding the green 500-day moving average, the blue 100-day moving average, turned around from there, although we are holding the December and January low. So it's a sideways trend in the short term, as you can see, for the last 2.5 months. So if the bulls are going to need a break above sort of the mid $82 area, the bears are going to need a break below the $70 area. So that is the range, sort of $70 up to $82, $83. Watch that range. Okay, that's it for me today.